Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a retest of the intraday breakout from yesterday around the 47 to 49 area, which now is pre-market support. On the upside, we had resistance at 54 to 56, and the breakout attempt beyond that zone ended up failing, and the market just continued bouncing within a range from that point on. At this point, heading into the open, that 54 to 56 continues to be a important inflection point on the upside. That's the area that really needs to be taken out in order to confirm buyers in short-term control. And if we can get a sustained breakout beyond 54 to 56, then we could be looking at a move up into 2163, the 65, 67 initial resistance, and possibly a bit higher into the open gap. And then we have the stronger resistance at 70 quarter to 72.75. But the higher probability objective on a breakout above pre-market resistance would be the 63 and the initial resistance zone at 65.67, where we could see some selling come back into the market, at least on first test, and especially if the market is exhausted into it. Now, on the downside, we have pre-market support 47.49, and holding above that tells us that the market is continuing to just balance within the overnight range, and it would leave the door open for another breakout attempt. And if we break down below 47 to 49, then on the smaller time frames, we'd know that the sell side is gaining control. From there, we can go back down and test 38 quarter to 40.75. Buyers could be active at that zone. And then the stronger area of support, or the more important one, is 31.5 to 34. So if we fail to take out 54.56 and we start getting downside momentum from that point on and broad market weakness, then we have to be careful on the long side, because a failure at 54 to 56 marks a failed breakout attempt, and quite often the market will return back to the recent lows to really find buyers. So even though responsive buyers can be active at 38 quarter to 40.75, we still have to exercise some caution there and assess the situation more in real time. Whereas if we got exhausted into 31.5 to 34, that's a higher probability area where buyers could be active. And the only time it would make sense to completely skip that zone is if we're seeing just excess weakness on the downside and just a lot of downside momentum, where it's clear on the day time frame that the sellers are completely dominant. Then we'd want to exercise some caution even at the support zone below. But in most instances, we can expect 31.5 to 34 to at least attract buyers on first test for an intraday bounce. And eventually, of course, if you keep hammering away at a support zone, it's going to give way. And the 31.5, 34 area has been tested a couple of times here, so we do still need to exercise some caution, especially if we're going down on just a lot of excess weakness. But so far overnight, very balanced market. We are going to just be watching the 54.56. We know that that's really the key area that needs to be taken out, and in order to get a sustained breakout beyond 54.56, we do need to see broad market strength. We need to see a upward trending advanced decline line. It doesn't necessarily have to be at a very positive absolute number, because the previous close is 52.75, but it does need to be in positive territory and trending higher. And then more importantly, we need to see sustained upside momentum if we're going to get a sustained breakout. So that means we have to see the tick holding above zero and printing some decent values. And if there's a lack of momentum, if there is a lack of strength, then it's going to make it difficult to hold above 54.56, and it could just take more time for the market to head higher. And if there's all-out weakness at 54.56, then it's very likely that we're going to get a failed breakout attempt. So really how ES responds to pre-market resistance and pre-market support today is going to help set the bias on the day. The market is setting up for a breakout attempt, and the overnight breakout attempt failed, but it doesn't mean that we can't make another attempt in RTH. So we're going to be watching that pre-market resistance area with yesterday's RTH high at 54 to really see whether there is sufficient strength in the market to get a breakout going. And if there is, then the first area of decent resistance is up at 63 and 65, 67. And even at 63, it's better used as a target, not necessarily an area to short. 65, 67 is a better spot where you can expect sell side to be active, and then 70 quarter to 72, 75 is still pretty decent resistance first time up. So that's really how the market is set up right now, heading into the open. So let's just keep an eye on pre-market support, pre-market resistance. Let's see if there is enough strength in the underlying market to go higher, and we'll take it from there.